Hello, everyone. Welcome to the market opening bell on Friday, March 21. Hong Kong stocks fell significantly on Thursday. The Hang Seng Index opened 17 points lower before the decline widened, dropping as much as 584 points in the afternoon to a low of 24,186. It closed down 551 points or 2.2% at 24,219. The Hang Seng China Enterprises Index fell 213 points or 2.3%, closing at 8,950, while the Hang Seng Tech Index dropped 204 points or 3.4%, ending at 5,836. Total market turnover for the day was 294.8 billion Hong Kong dollars. In mainland China, the Shanghai and Shenzhen markets saw their losses widen in the afternoon. The Shanghai Composite Index closed at 3,408, down 18 points or 0.5%, while the Shenzhen Component Index ended at 10,879, down 100 points or 0.9%. Combined turnover in the Shanghai and Shenzhen markets was 1.4415 trillion yuan, a decrease of 24.8 billion yuan from the previous day. The People's Bank of China set the yuan's midpoint rate at 7.1754 against the US dollar, down 57 pips from the previous day, hitting a 2 month low. The People's Bank of China authorized the National Interbank Funding Center to announce that the loan prime rate LPR for March 2025 remain unchanged, with the 1 year LPR at 3.1% and the 5 year plus LPR at 3.6%, in line with market expectations. Following the rollout of a series of incremental policies earlier, economic sentiment has improved, reducing the urgency for near term rate cuts. Looking ahead, industry insiders believe that lowering policy rates remains the general direction for this year, with the potential window for rate cuts opening in the second quarter, which would guide LPR quotes downward. Additionally, there's a possibility that this year could see more significant standalone reductions in the 5 year plus LPR to further implement targeted rate cuts for residential mortgages. In the Hong Kong market, copper stocks rose notably. Jiangxi Copper gained as much as 4% during the session and closed at 14.14 Hong Kong dollars, up 1%. On the news front, London Metal Exchange copper prices broke through the 10,000 US dollar per ton mark for the first time since October last year, driven by US buyers rushing to import this critical industrial raw material ahead of potential tariffs. Since the start of the year, LME copper prices have risen 14%, while New York copper futures have surged 26%, nearing record highs. This premium has significantly incentivized traders and producers to shift supplies to the US before any potential tariffs are imposed. China Mobile announced after the market closed that its net profit for last year rose 5% year-on-year to 138.3 billion yuan, with a final dividend of 2.49 Hong Kong dollars per share, both meeting expectations. The company's total capital expenditure for 2024 was approximately 164 billion yuan, while for 2025 it's projected at around 151.2 billion yuan, primarily allocated for optimizing connectivity infrastructure, upgrading computing infrastructure, long-term infrastructure planning, and supporting technological innovation and perception enhancement in its CHBN, which stands for Customer Home Business New Strategy. The funds will mainly come from operating cash flow. Companies announcing results today include Meituan, Sinopec, China Shenhua, China Coal Energy, Zijin Mining, Zhaojin Mining, NEO, Brilliance China, and Bank of Communications. Meituan's 2024 Q4 non-IFRS adjusted net profits is estimated to range between 8.7 billion and 9.8 billion yuan, up 99 to 124% year-on-year. Losses in its new businesses segment are expected to narrow to around 2.1 billion yuan, compared to an EBIT loss of over 4.8 billion yuan in Q4 2023. Full year 2024 revenue is projected to be between 336.4 billion yuan and 337.5 billion yuan, compared to 276.7 billion yuan in 2023, a year-on-year increase of 21.6% to 22%. Non-IFRS adjusted net profit for the year is expected to range between 42.1 billion and 45 billion yuan, up 81.1% to 93.6% from 23.25 billion yuan in 2023. Benefiting from efficiency gains and reduced losses in new businesses, the segment's EBIT loss is estimated to drop from 20.17 billion yuan in 2023 to approximately 7.2 billion yuan in 2024. Investors will focus on recent trends and outlooks for food delivery orders, unit economics, and subsidy rates for food delivery, average order value and rider costs, merchant subsidy plans, competition from JD.com's entry into the delivery market, Kita's investment strategy in the Middle East, in-store dining and travel business performance, Meituan flash sale growth drivers, and unit economics. Quarterly loss trends for Meituan Preferred and its grocery business, as well as cash and capital returns to shareholders. US stock markets were volatile. The Dow Jones Industrial Average rose as much as 285 points, but also fell by about 270 points at one point, ultimately closing slightly down 11 points at 41,953. The S&P 500 fell 12 points or 0.2% to 5,662, while the Nasdaq dropped 59 points or 0.3% to 17,691. Tesla edged up 0.2% but announced after hours a recall of 46,000 Cybertrucks in the US, covering most of the sold units, to fix stainless steel exterior panels that could detach during driving. Apple fell 0.5% with reports indicating its streaming service Apple TV Plus is losing over $1 billion annually. Microsoft dropped 0.3%, Nvidia rose 0.14%, and Meta gained 0.3%. The Nasdaq Golden Dragon Index, reflecting Chinese stocks, fell 3.8% by the close. Alibaba dropped 4.4%, JD.com fell 4.1%, Bilibili declined 5%, and Geely Seeker fell over 7%, despite narrowing its quarterly loss to 800 million yuan. Pinduoduo rose 4% as its profits exceeded expectations, despite weaker revenue last quarter. Hang Seng Index night futures closed at 24,065, down 128 points, 155 points below the daytime HSI close. On the economic data front, U.S. Labor Department figures show that seasonally adjusted initial jobless claims rose by 2,000 to 223,000 in the second week of March, slightly below the market expectation of 224,000, remaining at historically low levels. The Conference Board's data indicated that the U.S. leading economic index fell 0.3% to 101.1 in February 2025, following a 0.2% decline in January. Consumers' increasingly pessimistic outlook on future business conditions was the biggest drag on the February index. The Conference Board currently forecasts U.S. real GDP growth to slow to around 2% in 2025. Additionally, U.S. existing home sales in February rose 4.2% month-on-month to a seasonally adjusted and annualized rate of 4.26 million units, rebounding from a revised 4.7% decline the previous month, and far exceeding market expectations of a drop to 3.95 million units. Our stock pick today is Remegen, stock code 9995. Remegen is a fully integrated biopharmaceutical company dedicated to the discovery, development, and commercialization of innovative and differentiated biologics for the treatment of autoimmune diseases, oncology, and ophthalmic conditions with significant unmet medical needs in China and globally. Since its establishment in 2008, the group has focused on developing biologics targeting novel targets with innovative designs and breakthrough potential. It has built a comprehensive end-to-end drug development capability covering all key biologic drug development functions, including discovery, preclinical pharmacology, processing quality development, clinical development, and production compliant with global good manufacturing practice standards. The group has two drugs that have reached the commercialization stage: telitacicept, brand name Tai, and disitamab vedotin, brand name IDC. Telitacicept is the group's proprietary novel fusion protein for treating autoimmune diseases as the world's first dual-target biologic for systemic lupus SLE. It was approved for marketing by the NMPA in March 2021 and began sales. In December of the same year, it was included in the National Reimbursement Drug List NRDL for SLE treatment. As of June 30, 2024, telitacicept has been adopted by over 900 hospitals. Tizitamab vedotin, the group's leading antibody drug conjugate ADC candidate, is China's first domestically approved ADC used to treat solid tumors expressing human epidermal growth factor receptor 2 HER2. It received NMPA approval in June 2021, began sales in July 2021, and by the end of 2021, its indication for advanced HER2 expressing gastric cancer was added to the updated NRDL. In January 2023, its indication for HER2 expressing urothelial carcinoma was also included in the updated NRDL. As of June 30, 2024, disitamab vedotin has been adopted by over 700 hospitals. According to the group's earlier performance report, it achieved operating revenue of 1.715 billion yuan in 2024, a year-on-year increase of 58.4%, driven primarily by increased sales of telitacicept and disitamab vedotin injections. The net loss attributable to shareholders was 1.467 billion yuan, a reduction from the 1.511 billion yuan loss in 2023, mainly due to the continued growth in gross margins for telitacicept and disitamab vedotin, alongside a significant decline in the sales expense ratio. The group has developed a robust pipeline of over 10 candidate drugs, with 7 in clinical development stages, targeting more than 20 indications. Additionally, telitacicept and disitamab vedotin are undergoing clinical trials for over 20 indications in China and the United States. Recommended buy price 20 Hong Kong dollars, target price $22.5, stop loss $19. I personally do not hold the aforementioned stock.